Welcome to the channel. Check out the free resources in the description below. Let's dive right in. What if I told you that a single Airbnb property could generate more revenue in 1 month than a traditional rental produces in 3? While most investors are fighting over scraps in the conventional rental market, a select few are quietly building empires using short-term rentals as their secret weapon. I'm about to reveal the untold truth about leveraging Airbnb to supercharge your real estate portfolio, and by the end of this video, you'll understand why this strategy is creating more millionaires than any other real estate approach in today's market. Here's how it works. But first, let me share something that might shock you. Last year alone, Airbnb hosts earned over $14 billion worldwide. That's not total bookings, that's pure host earnings. Yet 90% of real estate investors are completely ignoring this goldmine, focusing instead on traditional buy-and-hold strategies that barely keep up with inflation, designed to save time. Here's what most people don't realize about the current real estate landscape. Traditional rental yields are at historic lows in most markets. With property prices soaring and rental rates struggling to keep pace, many investors are seeing cash-on-cash returns of just 3 to 5% annually. Meanwhile, savvy Airbnb operators in the same markets are achieving returns of 15 to 30% or higher. Let me tell you about Sarah, a nurse from Denver who started with a single duplex. She lived in one unit and rented the other traditionally for $1,200 monthly. After discovering the Airbnb opportunity, she converted her rental unit and began earning $4,000 monthly during peak seasons and $2,500 during slower periods. That's a revenue increase of over 150% from the same property. But Sarah's story gets even better. Within 18 months, she used the additional cash flow to acquire 2 more properties specifically for short-term rental. Her portfolio now generates more passive income than her full-time nursing career, and she's considering early retirement at 34. The secret lies in understanding that Airbnb isn't just about hospitality, it's about creating a premium experience that commands premium pricing. Traditional landlords compete on basic shelter, while successful Airbnb operators compete on lifestyle and convenience. However, this strategy isn't without its complexities, and that's where most newcomers fail. They treat Airbnb like traditional renting with shorter lease terms, completely missing the fundamental differences that make or break success in this space. The first untold truth involves property selection. Location matters differently for Airbnb than traditional rentals. While conventional wisdom suggests buying in stable residential neighborhoods, short-term rental success often requires proximity to attractions, business districts, or unique experiences. A property that seems overpriced for traditional renting might be perfectly positioned for Airbnb dominance. Consider markets near universities, medical centers, or corporate headquarters. Business travelers and visiting families often prioritize convenience over cost, creating opportunities for higher nightly rates than tourist-focused properties. Yet most investors overlook these B-tier markets entirely. The second revelation concerns revenue optimization. Successful Airbnb operators don't just list their properties and hope for bookings. They actively manage pricing using dynamic strategies that adjust rates based on local events, seasonality, and demand patterns. This isn't passive income in the traditional sense. It's active portfolio management disguised as hospitality. Professional operators use sophisticated pricing tools and market analysis to maximize occupancy while optimizing rates. They understand that leaving money on the table during high-demand periods can cost thousands annually, while overpricing during slow seasons creates extended vacancy periods that devastate cash flow. The third secret involves scalability through systems and automation. Individual property management might work for 1 or 2 units, but building a portfolio requires treating this like a business operation. Successful investors implement standardized processes for guest communication, cleaning protocols, maintenance schedules, and booking management. Technology becomes crucial at this level. Smart locks eliminate key exchanges, automated messaging handles, routine guest inquiries, and professional cleaning services maintain consistency across properties. These systems allow operators to manage multiple properties without becoming overwhelmed by operational details. But here's where the strategy gets truly powerful. The cash flow advantages of Airbnb create accelerated acquisition opportunities that traditional rentals simply cannot match. Higher monthly revenues translate to stronger debt service coverage ratios, making financing additional properties significantly easier. Banks and lenders are beginning to recognize Airbnb revenue in loan applications, though they typically apply conservative metrics to account for occupancy fluctuations. Smart investors prepare detailed financial projections and maintain substantial cash reserves to demonstrate stability and operational sophistication. The fourth untold truth addresses risk management. While Airbnb offers superior income potential, it also introduces variables that traditional rentals avoid. Seasonal fluctuations, regulatory changes, and platform dependency create risks that must be actively managed. Diversification becomes critical, but not in the way most investors think. Rather than spreading across multiple asset classes, successful Airbnb investors diversify across markets, property types, and guest segments. Some properties target business travelers, others focus on leisure guests, and premium units cater to luxury experiences. Geographic diversification helps smooth seasonal variations. Properties in ski markets complement beach destinations, while urban business-focused units provide stability during leisure travel downturns. This approach requires more sophisticated market analysis, but creates more resilient portfolios. The regulatory landscape presents both challenges and opportunities. Many markets are implementing restrictions on short-term rentals, creating barriers to entry that protect existing operators while limiting future competition. Investors who establish positions before regulations tighten often benefit from grandfathered status that becomes increasingly valuable. However, regulatory compliance requires ongoing attention. Successful operators stay informed about local ordinances, maintain proper licensing, and implement systems to ensure tax compliance across multiple jurisdictions. This administrative burden scales with portfolio size but becomes manageable with proper systems. The fifth revelation involves guest experience optimization. Unlike traditional tenants who choose properties based primarily on location and price, Airbnb guests evaluate the complete experience. Property aesthetics, amenities, communication quality, and convenience factors all influence booking decisions and review scores. Thanks for watching today. If you need help in your real estate journey, please drop us a comment and we will reach out to you. See you in the next video.